So in today's session, we will try to get familiarized with the Islamic financing methods, and we are aware of these financing methods to some extent, the condition, the criteria, how they are different from the conventional financing method. One common criteria which should be is that they are not like conventional financing method, and they are not involved with interest payment, and this financing facilities do not charge interest from the person or from the entity who is taking the finance from the Islamic finance or Islamic banking institution. So one particular distinctive feature of Islamic finance methods is that here financier shares risk, which is uncommon in conventional financing method, where the financier is not prepared to share the risk with the borrower or with the investor or with the person who is taking the finance. So in conventional finance, it is very common that the risk is totally transferred to the person who is taking the finance. However, in case of Islamic finance, bank has to share the risk with the borrower. Obviously, there might have some worst case scenarios, some unforeseen contingencies. So what is encouraged in Islamic financing methods, that the uncertainties as much as possible should be eliminated from the financing contract, and as much as detail, everything should be specified in financing contract to avoid extreme kind of uncertainties which is not permitted, which we learned in the very first class. You probably can recall the Islamic finance principles, that grahar or extreme uncertainties is extremely prohibited or discouraged. Okay, so what kind of financing methods are available in Islamic finance, and with which financing methods we'll try to get introduced today. So in the brief contents, you see there are mudaraba, there are tawarruk, then salam, ijara, then diminishing musharakah, istisna, project finance. These are common financing products available in Islamic bank. And recently introduced Islamic finance product is credit card. You see the credit card in the very first item in the list. But the thing is that there has been a debate. There has been a debate arguing that whether Islamic finance allows the credit card usage, or Islamic finance does not allow the usage of credit card. So we'll try to explore these financing methods. We'll try to explore these financing methods. So first of all, the credit card, which is conventionally used for consumer finance or for the retail customers. So how Islamic credit cards are designed? That is the first question, and how it should be Islamic. And before that, let me share the brief idea that how conventional credit cards are operated. So in conventional credit cards, it is basically a loan agreement between the credit card user and the banker who is providing the credit card. And for the simplicity, I'm skipping other parties who are involved in this operation. I mean the card providing companies, then the vendor. I'm skipping those part. I'm just assuming that there is plain two parts. One is the client who is using the credit card, and the banking company who has provided this credit card to his to its client. Okay, so you are allowed to use the credit facility for a specific period of time, and if you fail to repay the amount which has been used by you during the period, you will be charged interest amount based on the amount due on your credit card. And some banks charges monthly fee on the credit card, and some banks do not charge any fees on the credit card usage monthly, on a monthly basis. However, there are some annual maintenance fee, and these are the things how conventional credit cards are operated. And retailers who accepts payment through the credit card from the clients, they share a percentage of their profit with the credit card suppliers and also the bankers for using this and for facilitating this payment facility. So it depends. It differs based on the context, but these are the usual structure. But the thing is that why the conventional credit card is not Islamic, and how Islamic credit card can be designed. So there should be debate from both sides whether it can actually be designed in Islamic way or it cannot be allowed in Islamic finance. Okay, so first of all, let me share the idea that how the Islamic credit cards nowadays have been offered by the Islamic banks in our country and other countries as well. So there are two types, but I'd like to discuss on one type where they charge a monthly fixed fee from the credit card user. Monthly fixed fee from the credit card user. So say you have been given the credit limit of 100,000. It is a Islamic Sharia compliant loan agreement, 100,000 amount of loan agreement. But regardless of the usage of your amount, whether you use 1 taka or 100,000, or you do not use any amount during the month, you will be liable to pay a fixed fee for the services, I mean the credit facility services provided by the Islamic banks to you. So that fee, how much fee it look like? So that fee might be 500 for very plain card. I mean, you may understand the gold, and for silver it can be 1,000, for platinum it can be 1,500. But you see that if you do not use anything, say you have used zero, you have used nothing, in that case still you are liable to pay this amount to the Islamic banks if it is Islamic credit card. And now, for say, for example, you have used 40,000 of your credit limit in a particular month. So there is a due date on which you have to clear the due. So say you have, you will get 15 days for making this or replenish this amount. So if you pay this 40,000 by 15 days, you will be given no penalty. You will have to pay no charge. So this is free of cost. I mean, zero percentage is not here. I mean, say BDT is zero. You will not have to pay anything. Okay. Now, if the payment is overdue, if you exceeds the due payment date, in that case, you will have a late payment fee. So late payment fee is a kind of late payment fee in case of conventional banks comprises two percentages. So two portion. One portion is fixed amount, which is late payment fee, 500, 100, 1,000 like this. And another penalty is a kind of interest charges on the due amount for the overdue period. So this is in case of conventional banks, but in Islamic banks, it is absent, this one, what I just have mentioned. This one is absent, but this one is present. What is this? Late payment fee. Late payment fee is present. So it is a kind of plain fee. So say 500, regardless of your due amount. Say, for example, your due amount is 80,000. Or your due amount is 1,000, but your late payment fee is 500. There is no other fee. So there will be some, there is some similarities. There are some similarities like you have to pay minimum amount of due. Say it can be 5% of your total amount of due, or it can be 1% of due. If you make that payment, you will not incur this late payment fee if you incur this. So these are all about in case of Islamic credit card, and there is no nothing, no charges in Islamic credit card, which is directly proportional to the credit to the amount you will be using from the credit card. So that is how Islamic credit cards have been made distinctive from the conventional credit card. So conventional credit card fees, charges, I mean the interest charges, which is in particular is directly proportional, direct percentage of the amount which is used by the user. So some facilities are common. You can withdraw the credit card. You can withdraw, you can withdraw cash using your credit card facility. And maximum 80% advance can be taken by your credit card against your credit limit. And in Islamic finance, it is it is well checked that who is taking this credit card, whether they have the payment capability, they have a good amount of salary on a monthly basis, or monthly income, which is relatively certain. In this way, they provide this credit card facility. So, which will be good to review what we have learned here and to check that one credit card provided by our Islamic Bank Bangladesh Limited. So you see that we have mentioned about the fee, how fees are charges, how fees are charged by credit card providing Islamic Bank, and how credit limit is set. It is as usual related to, or as like as conventional bank, they look at the wealth level and the monthly income level. And there is if there is outstanding balance, it should be repayable by the due date. So people have started using Islamic credit cards by believing that these are Sharia compliant, and there will be some restrictions on the usage of Islamic credit card. The transactions should not be kind of Sharia incompliant transactions. So these are some common features. So what we can do, we can check the credit card provided by the facility provided by the Dubai Islamic Bank first, then we'll look at our Islamic Bank Bangladesh Limited Khidma credit card. So first of all, their annual charges are look like this. First year, Arab Emirat dirham 300, and for renewal 200, and for replacement 100. And cash advance can be taken 75 dirham. And these are some credit card types. These are in this way, it is more superior, platinum, and this one is less superior, and this one is less superior. I mean that this is very basic, classic. So you see the fees are going up. Fees are going up from 100 to 500 because platinum provides higher credit limit, and platinum provides more flexibility, and platinum provides more flexibility in due payment, and it also gives you greater facilities relative to the gold and classic credit card. So there are some other ancillary facilities which have been mentioned later. So let me share how Khidma credit card has been offered by our Islamic Bank Bangladesh Limited. Can you see my screen? Are you seeing my screen?
Yes, sir.
Okay.
Yes, sir.
Okay. So this is our Islamic Bank Khidma card. It has credit cards by Islamic Bank is a very recent introduction in our country. So they are mentioning it is a Sharia compliant credit card, and you see the fees. These are the credit limit. These are the credit limit, and you see the if the card is platinum, the credit limit is 3 times greater than the silver card.
Slide is not changed. Excuse me, sir. Slide is not changed. Slide is still at Dubai Islamic Bank.
Okay, okay. Okay, now you see my browser screen.
Yes, sir. You can see now.
Okay, I am trying to share the our Islamic Bank Khidma credit card features, and they are claiming that it is Sharia compliant, and their credit facilities are like this. As commonly you see that platinum card always gives more credit facility related to silver and gold card, and the name are added based on that. Okay, so the fixed fee, I just have mentioned the concept. This is known as this concept, ujra concept. So the model, what I just have shared with you, is a kind of model which is known as ujra concept, which charges only fixed fee. No fee is directly connected proportional to the amount used by the credit card or the credit limit, these things. So they have mentioned that what are the facilities and for what purposes you can use this card, and you see that what kind of fees they charge. So you see there is no percentage fee. There is no percentage fee. So there is no percentage fee. This percentage is minimum amount due calculation. So I am trying to stress that there is no percentage means that no percentage is linked, mentioned on the, dependent on the amount of credit used by the credit card user. So these are the annual fee for the credit card, different type of credit card, and you see that one thing is common, that if you make the ceiling of transaction or exceed a ceiling of transaction which is 2 lakhs, in that case no fee, no annual fee will be accepted from you, and it will be waived for you. And for some employees there is no annual fee. And you see same is for supplementary card, these are free. And you see monthly maintenance fee, these are constant, regardless of the usage of the credit card. And monthly over limit charge, this is also a fixed amount. There is no amount directly linked up to the amount used or over withdrawn by the person. And you see the late payment charge. Late payment charge is also constant, and it is only applicable if the minimum amount due is not paid within payment due date. So, and other fees are service fee, which are common in case of conventional credit card. And in conventional credit card, other service fees are not proportional. These are constant fees. So you do not see any kind of interest fee. You do not see any kind of interest charges. Do you see any interest charges here? So this is the only fee that charges, that is the monthly maintenance fee. So it is based on the ujra concept. And their payment due date is 15 days from the statement date. And you can obtain the cash withdrawal facility by using their card. And these are all about how can you obtain their Khidma credit card. So if you need a credit card and you want to avoid any kind of interest charges, Islamic credit card can be an option for you, and you can still avoid the overdue payment by making your payment within the due date. But at the same time, if you open a credit card of, say, for example, another conventional bank, you will see that they have mentioned that if you do not make payment by 30 days, there will be interest charges. It is this percentage for this due date on your due amount. So in this way, Islamic banks are nowadays offering the credit card facilities. So there are counter arguments against the offering of Islamic credit card. So you need to have opinion from both sides, which one looks more compelling, which one looks more following the Sharia. Based on that, you can start using it or you can avoid. One common principle in Islam, not in, I mean, as Islamic finance is from Islam, one common principle in Islam, that when there is a confusion on anything, that I can't determine whether it is compliant to Sharia or it is not compliant to Sharia, I'm confused. In that case, you are instructed to avoid it. You have been said, or it is suggested and it is recommended, leave it, ignore it. I mean, do not use it. So the same principle can be used in Islamic finance. So Islamic finance providing institutions are trying to provide the Sharia compliant facilities. So credit card is a very recent introduction in the Islamic finance and banking industry. So now the next is mudaraba financing, and it is very common, and it is very, very common. And
Sir, can you kindly please mention the counter argument against Islamic credit card?
Against the Islamic credit card, the counter argument can be, as you are providing cash, you are providing cash, you are providing loan facility, and you are providing actually money. So when you are charging money for giving facility to someone for using this money, that may look like interest. So say, for example, I'm giving you the facility, I'm an Islamic banker, I'm giving you the facility of using 80,000. Okay, so as I'm providing this facility, whether you are using it or you are not using it, but I'm taking 500 from you. Though it is not directly proportional to the usage of the balance by you, I'm taking this amount to you. So some people, or we can argue that as I'm making money out of money, that's why it may seem as interest. Okay, so which is more common in Islamic finance is to, I mean, a very, which has no debate, that is the mudaraba financing. So we'll talk about mudaraba financing, and you will get, you can recall from the lecture 1 that we have shown that making money from money, I mean making money from the monetary asset and making money from lending the non-durable
Yes, sir.
consumable asset is restricted. Can you recall from the lecture 1?
Yes, sir.
Yeah. So these are the counter argument. So you can compare this argument with the counter argument and get your own opinion. Okay. Okay. Next one is mudaraba financing, and it is a very ideal form of Islamic financing, and it has been made popular in the 1970s, especially in the Gulf countries, where the trading, particularly import-export, are occurred in a significant extent. So the importer, for making import from their exporters or from exporting countries, they would require payment. So for importing, but you see that as I cannot access that much of financing by myself unless I sell the imported goods to my customers. So there were the financing requirement that how can I provide financing, or how can I generate financing for importing goods from other countries or from exporters. So merchants are provided the mudaraba financing in that time, and it has been made popular from those days, I mean from 1970s. And nowadays mudaraba is no longer is used only for commercial financing, but also for retail financing, I mean the retail product. So people who are from the non-finance background just like to give a very brief idea that if your client is any institution, any corporate body, in that case your services are corporate services and you are providing corporate banking. And if you provide services to individuals, say student or a salaried employee or a businessman individually, in that case, you are providing retail banking services. So initially, mudaraba financing was popular in case of commercial financing, but nowadays it is used in case of retail financing. So we'll try to learn that how mudaraba financing is operated or how it is designed. So it is a kind of partnership agreement. So how it is partnership agreement and how it is used in case of transaction. So say for example, Islamic banks have their shareholders. So Islamic banks should generate profit out of their business. They are doing business. So one of the very holistic way to generate profit by doing business is offering the mudaraba financing. So what is actually happened in case of mudaraba financing? So in mudaraba financing, Islamic banks works or Islamic banks acts as a direct purchaser, acts as a direct buyer. So Islamic banks retain the ownership of the goods to be imported, and they have the ownership responsibilities along with the risk associated with ownership. So say for example, I'm a importer. I need a particular goods. Those goods are worth of $1,000, and I have made contract with my bank. My bank is Islamic bank. So I have shared my interest that I need this amount of product, $1,000 worth of product. So what my Islamic bank will do, my Islamic bank will make agreement or will make contract with the supplier who is staying in another country. In my import-export example, we are right now discussing an international trade example. That's why I'm mentioning importer-exporter. Okay, so Islamic bank will make a contract with the exporter that I like to buy this amount of goods from you. So Islamic bank will purchase that product from the vendor or from the supplier. So say Islamic bank has purchased that goods from the supplier. Here the exporter has $1,000, and the exporter has exported that goods to the Islamic bank. And when Islamic bank will inform the importer or his client or its client that I have this product which you wanted to buy, and make payment of 1,050, and I will transfer the ownership of the goods to you. So the importer, I mean I myself, will pay this 1,050 to the Islamic bank, and Islamic bank will transfer the title of the goods to me. So as long as I have not cleared the due, the title of the goods will be with the Islamic bank. So you see, there are some issues. Let me discuss with on those issues, then I will show you a diagram which will make this transaction more clear. You see, who has made the initial purchase? The bank has made the initial purchase from the supplier or from the exporter. So it is the bank's responsibility, I mean the Islamic bank's responsibility, to check that whether the intended goods has been supplied by the supplier. And if it is found that the desired goods have not been exported by the supplier, in that case, it is the Islamic bank's responsibility to dissolve this problem with the supplier. It is not the responsibility of the importer. You see, here, importer, I mean, I'm a client. I didn't work as importer. Islamic bank itself works as an importer. So if it has been found that a client is not satisfied with that goods, client can make a claim on the Islamic bank that I'm not satisfied with the goods you have sold to me. And in that case, Islamic bank will be liable to reimburse, or Islamic bank will be liable to compensate to the customer. So let me show you a diagram and we'll talk more about it. So you can think of the exporter here in place of vendor, or you can simply think of a supplier. You can simply think of a supplier here. And Islamic bank is here, and here I am the client. I would be importer if I didn't take help from the Islamic bank. But here Islamic bank is working as an importer on behalf of me, and I am the client here. And I didn't engage in the transactions made between the exporter, vendor, supplier, and the Islamic bank. And initial transfer of title is made by the vendor to the Islamic bank when the payment is cleared by the Islamic bank to the vendor. And when the deferred payment plus markup, you see I have made amount here 1,000 words, say 1,000 words. But now deferred payment is obviously 1,000, okay, plus the Islamic bank will charge a markup. So that markup is say 50. So total 1,050 should be cleared by client. So in this way, the mudaraba transaction is incurred, I mean the operated or made between Islamic bank and the client. Now there are a couple of issues we like to highlight. First of all, if you would do this transaction through conventional bank, in that case, conventional bank wouldn't make agreement with the exporter. Conventional bank would make agreement with the exporter's bank. Conventional bank would be issuing letter of credit. You probably have heard about it, letter of credit. Have you heard about it, letter of credit, LC?
Yes, sir.
Okay. Is there anyone among us who has not heard about the LC before today's class? Okay, that's good that we all have heard about the LC. That's why I do not try to mention about it. Okay, LC. So if you do go for opening, I mean, making the same transaction through conventional bank, you would have to open LC. So what is LC? LC, here through LC, the importer's bank is making a commitment or is making a note or is providing a promise to the exporter's bank that if the importer does not clear his import bill I will be liable to clear the due, or I will make the due clear to you. So for providing this LC, importer's bank charges a fee from the importer. So why LC is needed? LC is needed from the importer by the exporter because importer is doing a business other than bank. Say, for example, importer is a textile manufacturer. So the credit worthiness of a textile manufacturer and the commercial bank are not the same. The commercial bank has superior credit worthiness relative to the textile manufacturer. So when textile manufacturer wants to import anything, textile manufacturer has to purchase an LC from his bank and give it to the exporter's bank as a evidence that if he or she fails to clear the due, there is the bank who will honor the due. But you see, when Islamic Bank is in the place, and Islamic Bank, for making this transaction Sharia compliant, Islamic Bank has to be importer itself. In that case, will the exporter require LC from the Islamic Bank?
No, sir, because Islamic Bank is paying upfront.
So what are you getting? You are getting the facility to avoid the LC and its associated transaction cost. Is it good for the businessman? Because
yes,
you
sir.
can
It
you can
save
avoid
money
that.
also.
Okay. So in this way, LC is providing, I mean, Islamic Bank can provide superior facility to the people, I mean the importers who require LC in conventional financing system. Now, the issue is another issue what I like to highlight, that I have mentioned 1050 as a deferred payment plus markup. So you see 50 is how much percentage of 1000? How much profit is charged by the Islamic Bank from the transactions with the client?
5%.
0.05%.
5%?
Yeah, 5%, sir. For 105 taka and
Yes, okay. So now there is a common practice nowadays that Islamic Bank shares that how much profit they will be charging. If the good is worth of 1000, how much profit they will be charging. But you see that Islamic Bank is not liable to disclose that how much it had to pay to the vendor for purchasing these goods. So it can be that Islamic Bank, when purchasing the goods from the vendor, they purchase the goods at 950. So they can claim to the client that I would like to sell these goods, I mean this amount of goods to you at 1050. So here they are generating 100 profit. So nowadays there is a practice that they disclose the percentage of profit they will be charging on the goods they will be importing for the client. So nowadays this kind of mudaraba structure financing is used not only for this kind of international trade, but also for purchasing home for client, purchasing vehicle for client, purchasing personal belongings for client, valuable things for client. So the profit rate also varies for variation in transactions. And for making these transactions possible, Islamic Bank also charges a processing fee from the client. Now, some issues we like to highlight following this cost issue, that is, if there is a warranty issue, how it will be handled. Say vendor has provided an warranty facility. So when Islamic Bank is transferring the same goods to the client, you see that transaction, the title was initially transferred by the vendor to the Islamic Bank, but Islamic Bank has transferred the title to the client. Will there be any consequence on the effectiveness of warranty? If it has been mentioned by the vendor that if you transfer the title of this good, of this product, of this machinery to someone, your warranty will become void. In that case, will the client be agreed to take it from the Islamic Bank?
No, sir, because he will not be entitled to get the warranty.
Okay, so that is a big problem. That is a big problem. So Islamic Bank has to make sure that when I will be transferring the goods, warranty is also transferable. And another thing, I like to relate the mudaraba structure in case of vehicle financing. So how can we use it in case of vehicle financing? So what Islamic Bank can do, so there is a Tesla. So if you are a client, so you want to buy a Tesla car through Islamic Bank. In that case, the transaction will be structured following the structure what we already have discussed. But what is the benefit through purchasing through Islamic Bank? The benefit is that what Islamic Bank can do. Islamic Bank can make an agreement with Tesla and that I will buy 100 cars from you, and at the same time Islamic Bank can offer these 100 Tesla cars to its clients base. Now you see, if a single client approaches to Islamic Bank to purchase a Tesla car, the car price would be more competitive or more affordable to the client. Or Islamic Bank, if itself analyzes the demand of clients for Tesla's car, and Islamic Bank itself, based on the client's demand, purchases or orders 100 Tesla cars and offers it to its clients, Islamic Bank will get more competitive price from Tesla. Have you got it, what I tried to mention?
Yes, sir. Islamic Bank got the competitive price from this.
Okay, so in this way, Islamic Bank can itself engage transaction with the exporters or the vendors like this and make a huge purchase and offer attractive price to the clients, and clients will be more interested to purchase it from the Islamic bank. Have you got it? So you see that how why it has been possible, because there is a presence of Islamic bank who is capable of buying 100. But if there is a, say for example, a small auto shop, would he be buying the Tesla car at that price? At that price, it would not be possible for that auto small auto importer. Okay, so some of the mudaraba benefits can be shared by the Islamic bank with their clients in this way. So if there is a repetition of the transactions, and if Islamic banks can observe that if I make this kind of transaction with the auto sellers or auto exporters, I have a good amount of clients who will be interested to purchase from me, and in that case I will be able to generate more benefits for the clients, and I will be able to make profit out of it. And we like to conclude by mentioning that there are two separate agreements. One agreement is between vendor and Islamic bank, or supplier or Islamic bank, and another agreement is between Islamic bank and the client. And Islamic bank will only transfer the title to the client when the full amount, this full amount is cleared by the client. And there is some benefit when Islamic bank is retaining the responsibilities with itself, because if client makes default, or if clients does not want to make payment to the Islamic bank for good reason, for no reason, in that case Islamic bank can take out the property or take out the goods and again resell the goods to another client, and it will be kind of second-hand goods in that case, or also can make a resolution through court that I have this amount of due to be receivable from the client, and Islamic bank can take a legal charge. And in case of vehicle is an example of consumer financing, and we can also provide other examples of consumer financing, because consumer financing, when Islamic bank is providing this kind of consumer financing, consumers are getting more flexibility, more number of times for making their payment clear. Usually, if you look at the mudaraba product of our Islamic bank, you will see they provide 4 years time to make their payment clear, and also more than 4 in case of brand new car, they also provide the 5 years payment duration. And according to the Bangladesh Bank guideline, there should be some initial deposits to be made by the client. So say for example, if I like to show you from our Islamic bank auto purchase product, here it is. Okay, here it is. So it is a kind of mudaraba type of facility provided by Islamic Bank Bangladesh Limited, and it is applicable for almost all types of car. You see, starts from auto rickshaw to brand new private car, and you will get maximum 4 years and maximum 5 years for brand new car, and 4 years for reconditioned car, and 16% markup will be added on the purchase price by the Islamic Bank. And the amount of investment is this amount, maximum 2 million in case of reconditioned and 3 million for brand new car. But you see, there is a restriction that how much Islamic banks can participate. Islamic Bank can participate 30%, or if it is changed in the context, it can be more than 30%. And the security is maintained by hypothecation of on purchased vehicle. And we like to highlight one problem with this kind of agreement. That is how, say for example, there are different models of Tesla car. So one particular model, say for example, when Islamic Bank is making a bulk purchase, they are purchasing a single model in a bulk quantity. But say for example, you are a client, you are not preferring that product, you are not preferring that model. In that case, what will happen? That will create a problem. So in that case, what Islamic Bank can do, Islamic Bank can make a agreement with vendor that I can with the same price, I would like to customize my car. So you have to provide me this facility. And Islamic Bank, if it analyzes it has a good amount of demand from the customers, it can make transaction, or it can make import from several car exporters. So this is how mudaraba structure is made, or mudaraba structure is used in case of mudaraba financing. It can be used in case of commercial financing, and it can also be used in case of retail financing or retail products. And at the same time, you can also use it for real estate financing. So this is another consumer financing. So there are some facilities for some group of people to purchase or to get financing at zero cost for their real estate. And in some countries, especially in Saudi Arabia, there is a fund facilitated by the government, which enables its citizen to subscribe fund from that, to subscribe financing from that fund at zero of cost to purchase real estate. But as the number of citizens grows up and financing is getting shortages, financing is getting available financing is now in shortage amount, and also the QE to get their application approved is getting longer. Nowadays, the Islamic finance providing banking institutions in Saudi Arabia, one is Al Raji bank there, and Al Raji provide some real estate financing facilities in the form of mudaraba structure. So they provide mudaraba structure financing for real estate financing in this way, but they look at the capability of the customers. If they see that the family who will be purchasing this or who will be requiring this real estate, they have multiple person who are the salary earners. In that case, they charges less profit and they provide more flexibility. And based on the monthly salary, the amount of mudaraba financing varies, and also based on the tenure of the financing, the amount of mudaraba financing varies. And that is how mudaraba structure is operated, and it is a very plain concept in Islamic finance and Islamic investment. But in real life, a good number of challenges are faced by Islamic bank to implement the mudaraba financing. Some issues we have discussed. One issue is varieties of customers require varieties of product. So it may be technically impossible to satisfy the demand of satisfy the customized demand of their clients. So if Islamic banks does not make a direct transaction with the vendor, does not make a direct transaction with the vendor, and if Islamic banks provide cash to the client, and if client directly purchases this from the vendor, it will become Sharia incompliant, and it will no longer be mudaraba. So to avoid the complexities, to avoid the problems in purchasing products, and to retain the products under the ownership of the Islamic banks nowadays, particularly in our country, what they are doing, they are providing cash to the client, and client was making a commitment with the Islamic bank that I will go to this vendor for purchasing this good. But after getting the cash, what client is doing, client is taking the cash and going here, and he or she is doing something which might be Sharia incompliant. So in that case, it is no longer Sharia compliant financing structure. Okay. So there are varieties of problems, challenges faced by the Islamic banks, and obviously there are ways to solve these problems, but there is no room for the Islamic banks to avoid the Islamic finance principles and claim that we are compliant with the Sharia principles if they fail to do so in reality. So if they fail to do so, they have to acknowledge that I can't operate this in this way. I'm skipping my business, or I'm transferring to a conventional bank. So if we are Islamic bank, we have to follow mudaraba structure in this way. Now the tawarruk. So tawarruk is an extension of mudaraba agreement, and how it is structured. And one issue is we like to highlight that, okay, sometimes our client may require cash. Why our client requires cash? Because client is wanting to purchase something which Islamic banks do not want to purchase, or Islamic banks do not have the expertise to analyze those products. And also another reason can be, say, customers require varieties of products, varieties of say 100 types of product. So it may be technically impossible for Islamic banks to make agreement with each of the 100 suppliers for purchasing these goods for client. And also at the same time, why the customers may require cash payment, cash amount. Say, for example, Islamic banks have some clients who want to transfer their account from the conventional banks to the Islamic banks, who want to transfer their business from the conventional bank to the Islamic banks. So these clients have taken some loans from the conventional banks. So to transfer their business from conventional banks to Islamic banks, the customers need some cash immediately to clear the amount due in the conventional bank. So you see, if Islamic banks do not assist the customers in this stage, customers will continue to do banking with conventional bankers. So if these are the purposes, in that case, conventional banks can structure a financing transaction in this way so that customers get cash from their transaction. So tawarruk may look some or may appear some confusion or may bring some confusions, but before bringing confusions, I like to simplify this concept. It is a kind of converting the assets into cash. Converting the assets into cash. So it is a kind of that mechanism. And it is also related to the inverse of the mudaraba transaction. So say, for example, how it may be structured. It is similar to the mudaraba, but how it is different from the mudaraba. So let me add a party here. You can think of this affiliate as a broker. You can think of it as a broker. Remember what we are doing here? We are trying to understand tawarruk. Okay. So first of all, client makes an agreement with Islamic bank and mention that I will require cash payment. I will require some cash financing, and I want to have some cash balances. So when client will share his requirement with the Islamic bank, what Islamic bank will do? Islamic bank will make an agreement with a supplier or with a vendor to purchase some goods. So vendor will supply that goods to the Islamic bank after getting the payment from the Islamic bank. Now you see, a complete transaction has already been made here. So this is transaction number 1. And when the goods has been transferred by the vendor or supplier to the Islamic bank, now where are the goods? Goods are with the Islamic bank. the goods and the title of the goods are with whom? Islamic Bank?
Yes, sir. Yes, sir.
Yes, sir.
Okay, okay. Now in second stage, what Islamic Bank will do, Islamic Bank will immediately transfer the title of the goods to the client. It is not applicable right now. I will show you a clear diagram later, but trying to why I am imposing this diagram on the mudaraba structure, because I am trying to help you to understand the differences. I will show you a clear diagram. So Islamic banks will immediately transfer the title of the goods to the client. And what client will do, client will get a cash payment from a broker, from a affiliate who work with Islamic Bank and who need these products, which has been supplied by the supplier. And client will transfer these goods to the affiliate. Which goods? Which has been transferred by the vendor to the Islamic Bank and which has been transferred by the Islamic Bank to the client. And you see, there has been another transaction, transaction number 2, and there has been another transaction, transaction number 3. And when the client has transferred the goods to the affiliate, this affiliate or broker has made a cash payment available to the client. And say that cash payment is, say for example, that cash payment is 1,000 and that cash payment is 1,000. And now, after a certain period of time, client will make 1,050 payment to the Islamic Bank for these goods. And make it very clear, it is not Islamic Bank. Each of this party is distinctive. Each of this party is separated from each other. Don't try to think that this affiliate or broker is Islamic Bank. It is kind of a businessman who is requiring this product. And now the question is how the client will know about this affiliate who will be requiring these goods. Islamic Bank will make this information available to the client, that this person will require these goods. What can you do? You can work as an agent. By working as an agent, what are you doing? You are generating cash for you in the form of supplying goods to this person, and you are making this deferred payment to me. And as you purchased goods of 1,000 to me, say for example 90 days ago, and now you are making after 90 days, that's why you have to pay 150 or 1,050. So it is the kind of selling price between Islamic Bank and the client. The Islamic Bank has charged this selling price 1,050 of this 1,000 worth of goods from the client. And this is how tawarruk transaction happens, in this way. And this is the fresh diagram for tawarruk structure. So what are the issues here? Bank buys and owns the commodity, and commodity are sold to the client at a markup, and purchaser can authorize bank to sell commodity for a service commission. So the bank is charging a commission from the customer or from the client, and you see who is depositing this sale value. It is not the Islamic bank. It is not the Islamic bank. Can you recall the third party? This party. This party is depositing this amount. It has been mentioned here. Okay. And what client will do? Client will repay the due amount, this 1,000 plus a markup to the Islamic bank. And it may look a number of transactions. Why number of transactions is happening? To comply with the Islamic principles and to make the cash available to the client who is requiring cash. Have you got it? I will try to give you some examples from the service so that it will be more clear to you. But you see that there are some argument, there are some problems with the tawarruk. So you
But we
see,
are providing cash, rather commodities.
sorry?
We are not providing cash here, rather commodities. We are providing commodities to client. And client side
Yeah.
is third party and then repay the cash.
Right. Client is generating cash alternatively. Client cannot get cash directly from the Islamic bank. Client is generating cash alternatively by making a business here or by making an agreement here. Okay, client is here. You can think of client is working as an agent. Say, for example, this third party does not know how to purchase from the vendor, or this third party does not know how to make contract with the Islamic bank. So who are you? You are working as an agent. So why you are working as an agent? Because you require cash. You require cash and you have the expertise how to make this transaction or how to purchase from the Islamic bank. Okay. There are some parties who do not know how to make transactions with Islamic bank. So if a person requires cash, he can work with those parties and work as an agent and generate cash for the time period required for himself. So this is how tawarruk structure is conducted to generate cash for business. So I have mentioned that there are issues, there are arguments that against this kind of system. First of all, you see the client does not require this actual commodity. Client requires cash. So why I am trying to make client, or I'm trying to require client to play as a role of agent. So this is one argument. The argument what you just have raised. Okay. And you see this party, it cannot be a bank. If it is bank, this transaction is totally meaningless. because there has been actually no transaction. So for these issues, some countries have put restriction on the use of tawarruk structure. Okay. Now, for example, let me take another example here. Say, for example, there is an university, foreign university, and there is an Islamic bank. And here we are a student client. So foreign university requires tuition fees from a student client or a student. So what Islamic bank can do, Islamic bank can make the service payment to the foreign university clear and sell the same service what Islamic bank has purchased to this student who is requiring this. But you see that Islamic bank, if it pays foreign university 100, say 1,000 tuition fees, Islamic bank, for making this service payment clear by itself, will charge 1,100 from the student. It's not 1,100, it will be too high. 1,020. So how this is different from the conventional system? Conventional system is the bank will give you 1,000 and you will be paying it by yourself to the foreign university, and after certain period of time you will pay 1,010 to the bank. So bank has to be the part of the transaction with the supplier of the service or the supplier of the goods. Bank cannot be independent from the supplier of goods or supplier of service if the bank is Islamic bank. Have you got it? How tawarruk structure can be used? Yes, no?
Yes, sir.
Okay. Next, we turn to salam. So you see there are some transactions, some contingencies where it is very difficult to precisely estimate how much money will be required or how much financing is needed. So one particular example which is highlighted in the salam, or for which salam has been made popular, is for agricultural products. So in advance of the agricultural harvest, it is very difficult to know that how much will be produced or how much cost will be required. These are of uncertain. So in that case, salam is a kind of financing transaction where Islamic bank works as a purchaser or buyer and buys goods in advance from the agro supplier. Say, for example, I am a oats producer I am a oats producer. So Islamic Bank has, don't try to understand it as investment bank. Usually in finance, when we write IB, we mean the investment bank. So I'm trying to mean here Islamic Bank. So Islamic Bank has made an agreement with the oats supplier that I'm purchasing 1,000 kilo of oats from you at 500 taka per kg or per kilo. So Islamic Bank has made this amount immediately available to the oats supplier before the production. Advance payment, oats supplier has just received from the Islamic Bank. Now what oats supplier will do? Oats supplier will engage in production of oats and will provide its expertise and skills and purchase necessary materials and supply the goods oats to the Islamic Bank later. And you see, after the delivery of the oats to the Islamic Bank will get the opportunity to sell the 1 kilo of oats to the market at 700 taka per kilo. So you see, Islamic Bank is generating 200 taka profit per kilo, and you can think of how much profit they will be generating from 1,000 kilo of oats. So it is clear how Islamic Bank has generated profit out of this transaction. And this is a kind of advanced payment to someone. And now the issue is there is a risk, and the risk is to be borne by both financier and also the supplier who will be receiving the advance payment. Now you see, to mitigate the risk, what Islamic Bank can do, Islamic Bank can make another salam agreement parallelly with the marketer of the oats, or with the retailer, or with the wholesaler, or with the supplier of the oats. Not a supplier, I mean here supplier, I have mean the producer. So can you hear me?
Yes, sir.
Yes, sir.
Can you hear me?
Yes, sir.
Can you hear me?
Yes,
Yes,
sir.
Yes,
We
we
are
can.
hearing you, sir.
Okay, there was changes in the microphone. One of my Bluetooth microphone was on. Okay. Okay, so what I was saying, that to mitigate the risk, what Islamic Bank can do, Islamic Bank can make another agreement parallelly with the oats seller, make an agreement with the oats seller to reduce his risk. Okay, let me off it. Okay. To sell the oats at, say, for example, 700 taka per kilo. So in that case, Islamic Bank can mitigate his risk. So you see a diagram which illustrates the salam agreement or salam financing structure. So here investor is an Islamic bank. What Islamic bank is doing, Islamic bank has paid this amount 950,000 euros to an asset supplier, which will be supplied at after 90 days, and payment has been made initially or in advance. And the client the client has received the payment from the Islamic bank, I mean the advance payment. So when there will be production completed, what the client will do, client will deliver I mean this structure is not clear to me. It will be more clear if I would use two clients here. So let me write here. So here is the Islamic bank. And here is another third party who will be the, say, oats wholesaler, say for example. And here are the oats supplier. And Islamic bank has made this advance payment to the oats supplier. And oats wholesaler, what is oats wholesaler will do? Oats wholesaler will also make payment to the Islamic bank after making the agreement. And oats wholesaler and oats supplier, after the production, will transfer the goods to the Islamic bank, and Islamic bank will transfer the goods to the oats wholesaler. So Islamic bank will charge profit from the differences of the price it paid to the oats supplier, and it will receive from the oats wholesaler. So there might be differences in the obviously the differences will arise because the transactions will not be made immediately with two parties. Based on the changes in price, Islamic bank can decide to make agreement with the oats wholesaler later or earlier. Say for example, oats wholesaler is agreeing with the Islamic bank that I will make payment after 60 days or the 30 days before the delivery, and oats supplier is getting the payment, getting the advance payment from the Islamic bank before the 90 days of its production. So 90 days before its delivery. So salam is usually maintained in the agro products. Now the question is, can the salam be used in case of fish supplier, fish production, where the fish is, for example, fish is catched from the sea, or say for example, bird supplier can take the salam, or fish suppliers can take the salam. What do you think? I have made an example with what should I say? I have mentioned grain type of supply, but what about the birds and the fish suppliers? I'm not encouraging the killing of birds. I'm just, for example, if the supplier is in a responsibility to supply birds, now thousands of birds or thousands of fish, this quantity of fish. What do you think? Just think of and share your opinion very quick. Will it be okay or will there be any problem?
In this case, the quantity and the delivery date are specific in salam.
Quantity?
But for catching fish in the sea, we cannot quantity and delivery date and place are specific in salam. So I think that it won't be applicable for birds or fish, because if you go to catch fish in the sea, you are not sure if you get it or not.
Right. Exactly.
That's the thing.
Exactly. Thank you. You have reached to the right point. So in case of birds and fish, I mean the birds which are not cultivated, I mean which are not produced. I have mentioned those birds which are caught from the sky or from the flying by nest or something like those materials. So these are very uncertain. These are very uncertain, and Islamic finance does not allow you to make agreement with very uncertain things. But at the same time, oats cultivation is not very certain, but the degree of uncertainty is very narrow. The degree of uncertainty
is very less.
Right, relative to the catching fish from the sea or catching birds from the sky. Have you got it? However, if I mention, say for example, a fish cultivation from the hatchery, say for example, okay, or from the, say for example, chicken farm. In that case, salam is okay. Salam is very much okay. Salam is permissible. Have you got it? Okay, we are proceeding to ijara leasing. I believe that many of you have heard about the ijara leasing. So before going to ijara leasing, I would like to mention some follow-up on salam because it is very much related to one derivative agreement. Can you probably have heard about derivative. If you are not very new in this finance area, you have heard about the derivative. We make we make an agreement for the transaction, for the real transactions which will be happened in the future, for delivering a certain amount of goods at certain price on a certain point of time. Have you heard about the derivative? Forward contract, future contract, call option, put option? Yes, no?
Yes, sir.
Anyone?
Yes, sir.
Okay. You probably have recognized on your mind that salam to some extent look like derivative. Anyone?
Yes, sir. There is fixed future date, specific goods.
Okay, now let's try to understand whether they are similar. They are similar to some extent. I am not asking for similarities, so it will be convenient, or it will be time worthy for us to discuss how they might be are different. Okay, you see, in forward agreement, for example, there is no upfront payment. In forward agreement, your initial payment is 0, right? Between the long position, I mean, who is buying the forward, and the short position, who is selling the forward, there is no upfront payment by the long position to the short position. upfront payment is 0. But what you have seen? Have you seen it? In advance, financier is liable to paying full price to the commodity supplier. Have you got the first attack to the difference between conventional derivative and salam? Okay, it is not derivative. Our purpose is to make you clear that it is not a derivative agreement. Okay, derivative I mean, many scholars have made it clear that derivative, as it involves with too much uncertainties and making agreement with too much uncertainties, that's why it is not permissible in Sharia. There are counter arguments, but let me make one argument in against of the derivative. Okay, so you have got it right. No upfront payment in case of salam. In case of conventional forward agreement. Okay, now you may ask that there is a margin requirement in future agreement, future contract, but you see the future contract charges a margin which is a minimum amount, a percentage, a specific percentage on the value, and it is to be replenished or it can be withdrawn from the minimum requirement balance or the margin balance required by the broker. But you see here the amount is full. Now, when in case of call option and put option, I mean in case of option contract, you are also liable to pay a very minimum amount, which is the option premium, and that is very insignificant amount relative to the option price. I mean a very specific minimum percentage. Okay, not minimum, a specific percentage. Okay, but that is not full. Okay, so that is how it is different. Okay, in case of option, you have no obligation to exercise the contract, to exercise the option. Okay, but here salam, you are agreeing to purchase it from the port supplier, you are Islamic bank. And in case of forward future, there is a counterparty risk. Have you heard about it? Counterparty risk. Counterparty risk is the risk arise from the Are you clear? Have you heard about the counterparty risk? I have made an agreement with one party, say a forward agreement with a party, say a short position, but when you see that the price has gone down, short position is now saying that I do not like to exercise this, but there is no option to choose exercise or not exercise in case of forward and future. But here salam, you have no option, you have the obligation to exercise it. So there is no counterparty risk apparently. And in case of forward future option, what you can do, you can sell your agreement, I mean your contract, derivative contract, to anyone. So say for example, there are 10%. So number 10% can actually hold your agreement at the expiry of the agreement. But in case of salam, there is no way to transfer. Who is taking it? Islamic bank, who initially made the agreement. So you see what is the issue here. When the agreement has been transferred to the number 10 person, he or she has no attachment with the old supplier. But you see, when this is not exchangeable. The person is that person, that financier, that Islamic bank. In that case, he or she will feel attached to the oat supplier, that if oat supplier fall in problem, he or she will try to feel that what happened to you. So these are the some issues you need to think of, that the salam is comparable to the derivative, but it is not derivative, and it is different from the derivative. Okay. Now, ijara leasing. Ijara is, I believe, ijara is commonly known to many of you, and we make ijara transactions. And I probably have mentioned about the ijara type of financing when we introduced our Islamic finance in lecture 1, how we can make money by leasing out our real assets and by leasing out our durable property, we can make money. Okay, so how ijara transaction is made? Ijara transaction is made between two parties. So why ijara is required first? The question is why ijara is required. For example, you or me wants to enjoy using an asset, but I do not like to purchase it. I do not like to own it. I just like to use it. So say a company requires using a bus for its employees for 5 years, but company does not have money to purchase bus for its employees. So in that case, what the company can do, company can engage in ijara transactions or ijara agreement or lease agreement. So what how the lease transaction is made? So the asset supplier, who has the asset or who is the owner of the asset, that entity is known as lessor, and the party who will use the asset, that entity is known as lessee. So especially in case of vehicle, equipment, then IT facilities, then other computer facilities, usually ijara or leasing is very common. So what are the advantages to the lessee for doing the ijara instead of purchasing? So lessee can switch to new asset instantly by stopping the use of current asset. But if the lessee would purchase the asset itself, he or she would have to look for selling the asset before switching to another asset. So what is the benefit of the lessor? So the benefit of the lessor is the rental payment, which is a kind of comparable to the rentals we pay to our house owners for living in the house rented by our house owner. So rental payment provides an income to the lessor. Now the question is, in case of conventional finance, how lease ijara can be Islamic and how ijara can be conventional. In case of conventional, ijara payment is usually linked with some interest payment, interest rate. But in case of Islamic finance, it is also compared, but it is not directly linked to an interest index. Say, for example, in case of what should I say? In case of conventional finance, lessor will say you will have to pay LIBOR plus 10% as rental payment. So you see, LIBOR, the London interbank offer rate is the interest rate. So it is not a practice in Islamic bank. In Islamic bank, this kind of interest rate structure is ignored, and the amount is fixed on the agreement and mentioned on the agreement that how much you will be paying. And if it requires changing, when it will be renewed, when the agreement will be renewed. And over the time, when the lessee will be using the asset, it is the lessee's responsibility to look after. However, if there is a maintenance issue, I mean, what should I say, that there is a repair issue. In case of short-term lease, these expenses will be borne by the lessor, and owner is responsible for any loss or damage to asset, which is the beyond control of the lessee. And if there is any misuse or negligence by lessee will have to indemnify to the lessor for the asset, for the spoilage of the asset. Okay. Now you see, it is not very different from the transactions or structure with which we have been made familiar up to this time. And Islamic bank here, what Islamic bank will do for ijara structure. So for example, Islamic bank will lease out some, what should I say, IT facility. So Islamic bank has purchased some IT facilities from the vendor, and already Islamic bank has made the purchase price clear. And now Islamic bank will lease this IT facility to several clients in exchange of getting the rental installments for the period for which the individual client will be using this IT facility. Now, there is a practice whether Islamic bank will purchase directly from the vendor or Islamic bank will create a special purpose vehicle, SPV. So this special purpose vehicle is a separate entity from the Islamic bank. But why Islamic bank has created this? Because the expertise will be required to check the quality of the asset to be purchased from the vendor, and collecting the rental installment from the client also requires expertise. So if Islamic banks and if there is any liquidation problem, or if there is any serious default problem, the consequence will be borne by the special purpose vehicle, and Islamic bank will get protected from the consequence of the special purpose vehicle. So a special purpose vehicle may get bankrupt, but Islamic bank will keep itself protected. But remember, Islamic bank is the owner of the special purpose vehicle, and all the income due to the special purpose vehicle will be received by the Islamic bank. But the separate entity has some distinctive advantages. I will encourage you to explore what are the motivations for creating a special purpose vehicle. And it is not for this case. It has been used by many entities nowadays to reduce the risk of their parent business for doing, they engage in creating a special purpose vehicle. So this is a separate entity. So a special purpose vehicle can engage in this purchasing of asset from the vendor and also collecting the rental from the leases, several leases. Okay. So now the question is, if a particular client, say for example, client wants to purchase the asset he was using for say 5 years or 10 years, what can client do? Client can make the payment to the Islamic bank and make the purchase of it. So how? Say for example, Islamic bank is saying that I purchased this asset for 10 crore, and now this asset has been used by people for several years. Now this asset market value is 3 crore. This asset market value is 3 crore, and you have to pay 3 crore to me. In that case, if client agrees to pay 3 crore, the clients can acquire this asset for itself. So this is how the leasee can acquire the ownership of the asset he was using for himself or herself during the lease period. And we like to conclude by highlighting there are some conditions or limitations in case of ijara. The property which is leased out to the leaser should be usufruct. That means the leasee have to make sure that leasee can lessor has to make sure that leasee can enjoy the benefit out of the asset by using it. And the lease agreement should not contain any element which is very uncertain. And the leased property cannot be used for any purpose which is Sharia in compliant. And say for example, IT facility, what I was saying, a leasee, for example, using the IT facility for say for example, for providing some services which are Sharia in compliant. In that case, what lessor can do, lessor can include some restrictive covenants. Covenants means conditions. So these are here conditions are restrictive, means you cannot do these things. So this asset cannot be used for these purposes. In that case, these are restrictive covenant you can introduce. So hire purchase is an way to purchase the asset after using it. I mean, what I have mentioned, the leased asset, you can purchase it either during the lease period or after ending of the lease period. And usually when the asset is used for a longer term, in case of capital lease or financial lease, the hire purchase is very common. Very short-term lease or operating lease, the hire purchase is not common. And diminishing musharakah is a kind of partnership agreement to purchase an asset by providing financing by a partner. And what is the way to use the musharakah? There is the structure, it will be very clear if we use the diagram. Over the time you are using the asset, you are paying the rental payment, and out of your rental payment, the rent is decreasing over time, but you are paying a portion which constitute a repayment of the amount which was required to purchase the asset. So over time, when you will make the repayment clear, you will have the ownership to the asset. So you can compare it with the conventional finance mechanism, which is available in balloon loan, balloon type of installment payment. So there are some examples for home purchase and equity financing. You can relate it and you can check which financing structures are covering this purchasing or these transactions. And I do not like to mention about istisna. I encourage you to look at istisna just to complete it one line. It is used for a longer term. It may be comparable with salam, but it is for a longer term when we do not know many things. When it is longer term, payment is made in advance for a deferred delivery, and it is for a longer term, and manufacturer get fund from the bank to cover up its input and materials cost. So this is all about for today's session. I would like to stop here.